Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Wednesday, the 21st of September, 2022, about 6:05 p.m. Central Time. So we saw the Fed. You know, I have a philosophy that I follow almost religiously. And it comes down to when I see a big report, I try to avoid it. Now, in this particular case, I didn't have any setups anyways to even imply that. It was an interesting time for me. I have been writing my paid subscribers that for most of the week in the futures, I didn't see anything. In the ETFs, we had 3 trades on, covered them today, and that worked out to be good because I was primarily short in the metal markets, in the miners, and well, I'll cover that later for them. Okay, that worked out nicely. That's all I can say. So the Fed comes out. Fed does its 75 basis point hike. No surprise there at all. The Fed talks. They're going to fight the inflation scenario. The dot plot, and I told you what you have to focus on was the dot plot, calls for this year somewhere between 1 and 1.25% more in the interest rate hike, and maybe, just maybe, only another quarter point in all of 23 and sitting still for a good part of the time. Now, you know and I know that if inflation stays sticky, that quarter point hike for 2023 can become several of them, maybe more than that. It depends when inflation lets go. And there's no question, if you listen to Fed Chair Powell in his press conference, that's what he's fighting. He's fighting the inflation scenario. On the other hand, I look at it that the market's looking at well under another 2 points in hikes. It's certainly not 3.75s coming at you unless the inflation's super sticky. That's a positive in its own way. People don't see it that way, and that's fine with me. I don't care what they see. I care what I see. So that's how I look at it. So in the metals, the markets have tried to stay up. I get copper being down because you have the Fed raising today 75 basis points. The Bank of England's going tomorrow. They're going to raise rates. I don't know that Mr. Kuroda of Japan will do anything. I believe it's tomorrow night that we would see what they do given the time frame. But he has been committed to keeping everything down. Yet we lost the bearish embedded reading in the end, and that often means you're going to get a rally attempt of some type. So let's go to the gold and just deal with the gold in the near term. Number one, all gold keeps getting our headwinds against it. Once you cross today, think about this, 4% in the 2-year note. What do you want to own gold for? You're getting a 4% return for 2 years. Gold hasn't made you any money. If you and I sit back for 2022, you peaked and you've gone down. You're not making money. You're tying up your money interest-free in a losing asset. It's a big headwind to overcome when you got a 4% number in front of you. When you look at the gold chart, you can see what it's doing. Are we ready for a bounce? We could be, but a bounce is not a big change in the trend just yet. I can make an argument that with the outside day up that we had on Wednesday, we're already open for the Thursday trade, that unless you take out today's low of 1661.30, the possibility of getting back towards that 18-day average, 1700, 1709 level, that is probably an attempt the market wants to make as it's coming off the lower Bollinger Band. And I'll repeat, Bollinger Bands, the odds of staying under them 5% of the time in totality. No, you don't stay short under a Bollinger Band. You hit it, you want to be either grabbing all your position, parts of it. I teach it in my enhanced Bollinger Band course under the Education Center on the website at iraepstein.com. And what about momentum? Okay, did you lose the embedded reading or did you get one? You can't count Thursday. We don't know where the market's going to be. So we go back on this chart to Wednesday. Both numbers were under 20. Day before, on Tuesday, well, let's just say, are we there where I wanted to be? On Wednesday, I knew I did something wrong. Here's Wednesday. Both are under 20. On Tuesday, both are under 20, but not on Monday. So today being Thursday's trade already, even though it's only Wednesday, I know it's confusing that the markets are open. I take a look and I go, okay, if the market closes like this, I get my embedded reading. If it stays embedded, well, then maybe you're not going to make it up to that 18-day average. But if it loses the embedded, the odds are super strong. It's going to make a run there. Is the market a short sale right here? No, you're waiting to see what it does. That is the beauty of that part. The gold-silver ratio, look at how silver is now under the 86 ounces to get 1 ounce of gold. So it has fallen back from 97, so it's gaining. And the chart, trend, well, overbought, but trend up, bias up, resistance fairly formidable, 2021.70 up to 2042, let's call it. That's your resistance zone. I'd be cautious. When a market's overbought, it's not screaming buy me. In copper, it is still bearish. You have markets with lower highs, lower lows, momentum down. I think the trade is still aggressive on the short side against 350.50. They'd be wrong if you cross 355.80. It's too much money as far as I'm concerned to risk in the market. But that's what it is saying. And the objective is wherever the Bollinger Band comes in. In the platinum market, well, today, let's see what you got up to. If we come to this market, and we'll come back a day here, today's high in the market was 943.5. You just missed the Bollinger Band at 944.35 and right here. So you've been up here fighting this resistance. You're caught in a game like this. You're caught in the upper Bollinger Band to the green line, which is the 100-day. Is the market embedded? So this is the numbers for Wednesday. Both numbers over 80. Both numbers over 80 on Tuesday, and both numbers were over 80 on Monday, not on Friday. So you're embedded. As long as it stays embedded, which means the red line doesn't slip back under 79, there's a key number here. In fact, one of the numbers is here that the pros are probably buying at 909.80, looking for the trend to continue. I'm cautious on this for a reason. I don't think you'll get much beyond the 200-day average in the Bollinger Band on this rally. So I would trade that if you're doing so with a little caution. In fact, a lot of caution on that particular trade. The Palladium market keeps fighting at the 200-day average, the light gray, and the 18-day average. As long as it keeps holding it, the pros are buying. And as they're buying it, you got to watch what it's doing. I didn't like that it closed at the lows of the day today. If the market takes out this 2080 level, then I'm going to look for the next level, the 100-day average, to be hit. The bulls have the reins on the market at this point in time. Momentum's trying to turn down, but that can go wishy-washy. You got to take out 2080 to give me an indication that the uptrend is lost. And in the dollar index today, I know you're going to not like this, profit-taking day if you're long. Why? First time you got up to the Bollinger Band. You're not embedded. So long. So the average guy's going, oh, the dollar's just going to keep going. And I'm going, you really think so, huh? The Fed has said that maybe we only have 1.5 percentage points more to go on interest rates according to the dot plot. Well, if that's the case, other interest rates might go up more in other economies. Maybe their currencies can make a turn. I get the first impact because we went first out of the box, but there's more to come here. You watch. And as we go, you know, the European Central Bank's going to be under pressure to do something large. The Bank of England's got a nightmare on its hand, and the nightmare being, yes, it's got the inflationary pressures, but there's so much energy inflation, and that is breaking the economy. If they raise rates too much, they put the whole economy in jeopardy. It's a nightmare decision for them in the morning. I don't know what they might or might not want to do. It's going to be a rough one. But when I look at these markets, I try to figure out in the morning what I'm going to do, because I'll get to see tomorrow what happens in Asia as they awake and they see what happened in America, see our decision process. Then it's going to go to Europe, and then it's going to come back to us. So at 5:30 in the morning when I'm recording, I've already seen the reaction around the world, what I'll call the yin-yang. As it comes back onto our shore, I'm looking for ideas. And now that I don't have to worry about a CPI number for weeks on end, another set of rate hike in November, you got 6 weeks now before you get another one of those coming at you. Okay, I'm comfortable. And they're already saying, 75 basis points at the next hike. So I don't think that the Fed problem there is going to be the biggest report in the world, especially if CPI stalls and doesn't accelerate. If it accelerates, a different problem. But I'll go through all this in the morning with you, cover 80 some odd charts between the Spider ETF and the futures, all these markets, throw out trade ideas. A lot of trades probably tomorrow coming from me in these. If they're setups, I'm going. I don't have any reports to worry about at this point in time. And to me, that's the whole key to it. You don't want to step in front of a speeding bullet train. You hear me say it all the time. The reason I say it is, think of me as human Swiss cheese. I have had everything done wrong in trading that a human being can do probably over my 50 some odd years. And the one thing I learned is I get more fun in Vegas sitting at the table. I wrote about this tonight, to be lucky than going through one of these reports where even if I called it a 75 basis point, I kept saying it, I didn't see a 500 point decline in the Dow coming out of that. So no. The market knew we were going to get 75 basis points. That was the big consensus. The outlier was 100. Yet there you go. You don't stand in front of the train. Now I'm there to pick up the pieces as a trader. Now my traders are ready to go. I'm ready to go. We have nothing on the books. Now we start looking to place ourselves into the market. I hope that makes sense to you. If it doesn't, I'm not the guy for you. If it is, you should take a hard look at this video combo. It starts you out at $16.90 for your first month. You're not committed to month on month. You can quit whenever you want. You're going to get 48 videos in a month, each averaging 18 minutes long. And they're done in such a way that on the bottom, you can, as you pull your cursor on the bottom of the screen, it lights up and it tells you what section I'm in. So you can go right to the energies, you can go to the interest rates, the currencies, in both. It's stock section, as I do the ETFs and the stocks. I cover an awful lot of ground. How do you find out more? Go to our website. You can also go right on up, not with that hand, I'm going to bring this hand up there, right there. If you move your cursor, there'll be an icon that appears, so it'll take you right to that area. Give it a try. You're not committed to anything. You're spending more in 3 days of your Starbucks coffee with your tips than you're going to get here for 48 videos. Remember, each weekend, you get a weekend look at the market and longer term charts. That's going to be a lot of fun this week. I'm Ira Epstein. You have a great day. Thanks for watching me, and I will catch you all tomorrow. Take care.